Saturday morning, what do we have here? We'll tell the MMTs that are here live right now in their Saturday training. And after our great 4-week rally and 4-week reversal in the Nasdaq VXN weekly fear indicator from the peak of that 46 area, which was a higher high, during the 52-week calendar yearly low that we went through. And the thing about it is, when that fear indicator was just going down nicely, but even during the volatility phases from that diamond pop, up here, this is where we landed at 25. Now, on the weekly level, over here, we consolidated where complacency was very heavy, running at very high extreme levels. Not only that, you can see that big breakout on the fear, and that's when we had them big shorts working back in May, June, July, August, and September, because we did. And at times, we had rallies, and fear came down, but ultimately, within the overall calendar yearly low of the fear, the Nasdaq comp over here had put its highs in where we said that we were having a big reversal. There's that volatility hook right over here. These tops from that swing high, we finally put the bottom in. This is a 2011 calendar yearly low on the Nasdaq 100 and our platform down here, but we've had that 4-week rally. But not only that, during that 4-week rally, you can clearly see the 4-week reversal in the fear. And the thing about it is that the buy to cover short interest came back into the tape. So the ascending ratios were working off of these final calendar yearly low. And we had reversed here and we put the bottom in here. We have used this accurately and traded everything as one would, both long the market and short the market, long the market, the calendar yearly low. And as we put in these weekly diamond support levels across this price handle area, we clearly popped up and we tested, we stayed above the half weekly bar. Of course, this is on the Nasdaq 100 weekly now. And it was time to get net long once again because we had hit a negative ratio delta in the market maker platform, and it started to ascend mathematically the other way, which triggered you long. How far it would go? Well, we would let the buyers and the sellers, but most people have sat the rally out. Most people have sat the rally out. And high frequency volume computing machines that are non-human who are in it can drive these weekly movements much higher. And that's exactly what they did. They brought it right up to our diamond reversal here, down to that diamond bottom here, to that diamond top, and finally the ultimate low. But take a look at where we're at, MMTs. These weekly diamonds across here, going all the way back over here to this week right here. This is important because that's going to be 110 of 2011, and you can clearly see we're coming right up there. This was that first top with that first calendar year reversal that we called on a NASI. It's all on stockmarketpunting.com. Go back, you'll find it. But then we had the rallies back and made that blow off top, and this was a reversal week that we said was going to happen, and that was on 5-2. But prior to that, in that last part of this April movement, we said that there was a huge correction around the corner and that it was time to get net short and that these markets were going to take a terrible tumble as they did. But within the increased price volatility, it was very hard for an investor, trader, or anyone to interact, but MMTs were there making a market every day. Why? Because their platform allows them to do that on an intraday level, a 15, 30, and 60-day level in price action between the buyer, the seller, the long call, the short put as well. And learning how to master these weekly movements and 52-week index lows like the Nasdaq comp, and we've done many of them over the calendar years. This one here had set a record over the last 25-year period, and as that has happened, the fear has come down. And if we come down and hold support back here, that means we're going to be more complacent and we're going to be up at this part of the area of resistance levels, and I'm going to give those out to MMTs. Right now, this half down bar on this weekly one, MMTs, this down bar right here was on 725. The high was 2895.4, the low was 2724 now. But here's the thing, 2792.20 is that half weekly price action bar. That's going to be one area. Another area slightly above there is going to be this weekly bar right here, and that's going to be 2803 on that S&P, or on that, just going to follow the S&P the same way. And this is going to be relative to that S&P weekly chart that I showed. This is going to be that upper end at 2803.26. Okay, that's that upside area. We're going to be watching this major bar right here at 2732.87. This was a weekly bar that happened on 6/27 of 2011 right here, and it's the midpoint of that. And you can see this diamond, but you can see that this diamond weekly here is slightly above that one. But look at the major diamond areas in our platform, which equals the buyer, the seller. It weights the buyer and the seller of the indexes and equities, and even works with option derivative market maker pits as well. So we're going to have this major area of resistance. If that should be the case, then that would mean that the fear factor would come down. But when we do hit support and start to turn, that's when we're going to be looking at this mathematical equation. We've been involved. We called the bottom here. And the thing about it is we understand that in our yearly mathematical formulas versus our weekly ones, is that we can understand that when we look at the overall resistance levels moving forward, that one full delta up from here is going to be, well, there's 2756. So 3 deltas up, MMT is 2794. 5 deltas is 2833 on the Nasdaq comp from here up. And how much is a delta on the Nasdaq comp? Well, we all know it's $59.10. That's a weekly movement that you can move $59 in one calendar 5-day weekly movement. It's easy to do. Right here, if you take a look at this last weekly move that we put in the top, you can take a look is at the low. The low was 2598.74, and the high was 2753. Okay, and the low was 2737. And the thing about it is that was a previous that's this last week right here. And it's important to know that the total movement from the bottom up was 154.63 from that support level to that top, which has brought us to this major resistance level. And it is at a short-term, very, very, very weak support level, MMTs. And that is something that we don't want, because if we hold here, then our resistance will be here. So moving forward in the calendar month of November, the major part of the bull has sat out that rally because even they couldn't believe it because of the contagion fears with the European banks, not to mention several other things as you've been trained on, and we're dead heat in the middle of the calendar year earnings season here in October. And a couple of weeks have gone bad. Couple of weeks have gone good in the earnings. So we've had a mixed bag for the overall part, but the thing about it is the short squeeze, the buy to cover, has been a big part of the movement, along with the high frequency computing machines that can wind that tape up, that buy side tape up, just wind that thing up. That's not a human, that's an artificial print done by something else, and there are mathematical equations to each one of it. So we moved up. If you take a look at what a delta is, again, it's 59 handles. That's darn near from that bottom up. That's how much of that last movement was, and it came right in here at that SMF half-weekly secondary bar where we closed up at the high of that diamond, and this maintained above that half bar, and every dip down, every delta down, 2 deltas down, as we've made higher highs back up in here and in that resistance level. And not only that, we're going to hit these support levels and where we end up at here. It's all going to be based on the entry and the exit and the trade management between long and short adjusted risk, using calls and puts to diversify, using bears, bulls, indexes, equities as well, and how much more room we could come down. The more we come down, the more topping we are going to get, and the harder that the lower the fear level, then that means that that bear and bull sentiment has totally changed. MMTs, let it be known what this calendar year has been like and how to get on the next biggest trade is that as the earnings season winds down and as the honeymoon in Europe becomes to an end and that news works its way out of the system, well, hey, markets are going to have adjustments. But not only that, you got QE3 being injeculated with injection twister. Ben Bernanke, does that make sense? Well, don't fight the Fed. That's been part of the major part of that trend is that massive worldwide liquidity injection, which will take that bull up to that major resistance. But nonetheless, just like we call all movements in direction, they all have the same behavior pattern, the same psychological patterns, the same execution patterns over and over. MMTs, you've been through it, so we're going to get ready to figure out where we top out here and where we bottom out here, and that we're starting another new monthly trading cycle on the actual Nasdaq comp, and the Nasdaq comp has been leading this very strongly. And is the bull going to want to come off that sideline and chase that move up? Those underperforming mutual fund managers, hedge fund managers, and everyone alike in trading rooms around the country who have sat on the sideline have not participated. Where do they start? It will show up in your 3-minute, 15, 60, and daily. It will show up in your market maker MMT platform. It will show up in the put to call ratio. Just remember, the higher we go, the more inflated the calls get, the more deflated the puts get, and everybody's been part of those wonderful trades, and the stronger resistance levels will get.